In this video, I'm going to be giving you another tool to put in your arsenal so that you can become a better trader. One of the best indicators that I use is the candlestick. So in this video, I'm going to be breaking down each part of the candlestick so that you can understand it and you can use that to your advantage to make more money. And sure, these lines look cool and you can see it going up clearly, but what about actually trying to enter a trade? How can you use this line to help you? You can't. So I'm hoping to help you understand the candlestick so that you can use that to your advantage and become even more profitable. So you have several different types of candlesticks. You have a green candlestick, a red candlestick, and then you have a doji. So I'm going to go through and explain what those are and what each part of the candlestick itself means so you can use this to your advantage. And I, at least, find this really simple and easy to understand. So I'm going to point out what each part of the candlestick is. So right here you have the body. And the body is essentially just the solid area of the candlestick. And then coming off the top and off the bottom in this example are the wicks. And the candlestick as a whole not only represents price action, but it also represents time. So in this example, I have my time interval set to 5 minutes. So each candlestick is 5 minutes. And then back to talking about price action, that candlestick is going to show you where the stock opened at that 5-minute time interval and it closed at the end of that time interval. And then the wicks represent where the price went to and then rescinded back to the actual body of the candlestick. So right here, we're going to look at this red candlestick, and I'm going to explain that first. The red candlestick, the top of it is where it opened at, and the bottom of it is where it closed at. And so in this instance, the top of it is where it opened at the beginning of that 5-minute time interval, and then after 5 minutes, it closed at the bottom of that candlestick body. So the wicks themselves is where the price action had went during that 5 minutes. So this top section right here means that the price had went up as far as that wick goes. So the top of the wick is as high as the price had went. Now the other way, the bottom of the smaller wick on the bottom is as low as the price had went. And then we move on to this green candlestick and we can look at the wicks on this one. And so the green candlestick opens at the bottom and closes at the top. It's pretty simple. It just is reverse. But also the wicks on this green candlestick show us how far the price went down and up during that period. So as you can see, at the end of the bottom wick is as far as it went down, and that's actually the lowest point in this example right here. And then the top of the wick is as far as it went up before it went down and closed at the top of the body. Now, as far as settings go with your candlesticks, some people like to use the hollow body candlesticks in their trades. Me personally, I like the solid body. It just makes more sense in my head, because if I'm looking at this hollow body, then my mind personally gets the wicks messed up with the actual body of the candlestick. But this is just another way of looking at it, and so it's exactly the same as the solid body. So don't get discouraged if you see anything like this. Now, one thing that I haven't talked about so far is the doji. So I'm going to point those out right now. And a doji is essentially just a wick with no body. And this is another example of dojis. And as you can see at this top one right here, it just has one green wick going up. So with these candlesticks, I was talking about price action earlier. So what price action is and what the candlesticks actually show is the buyers and sellers essentially fighting back and forth to make the stock go down or make the stock go up. So with these dojis, it is actually where the price action was even. The buyers and sellers were both even in how much stocks they had traded back and forth. Whenever there's a green candlestick, that means there was a lot more buyers than there were sellers. And whenever there's a red candlestick, that means that there was a lot more sellers than there were buyers. And with these wicks, that means that during that time period, so the 1 minute time period, 5 minute time period, or 30-minute time period, however long you want to have your candlestick set up for, that means that in that time period, that is where the buyers or sellers had got the stock down or up to. So once again, if you like this video, then hit that like button. If you like all of my videos, then hit the subscribe button. But don't just stop there. I've got links down in the description so you can sign up for Webull and get free stocks. Also, I've got extra links so you have courses that you can go take. These are the same courses that I took, so I encourage you to go hit those links, go take these courses, and start making money now.